Elon Musk just sent his final warning to the Fed, and it's rather scary. We're going to discuss that in today's video, folks. We got to talk about also Tesla numbers for 2023. I think that's an important subject, and just kind of a few frames of thought for anybody that owns Tesla stock out there or is thinking about buying the stock. I think there's just a few things we got to consider, okay? We'll talk about PPI numbers and kind of my opinion on that. The fourth thing we'll talk about is some good news I have to share with you. Fifth thing we'll talk about is the markets, and as well as we'll talk about a few different stocks there. We're going to talk about the group of stocks that could fall big next, and no one's really looking at those right now. And last thing we'll talk about in today's video is one of my stocks that just bought a company, and is pretty exciting. So we'll discuss that in today's video as well. Hope you guys enjoy this. As always, appreciate everybody that's joined me, and thank you for being subscribed. Okay, so Elon Musk felt the need to tweet again, okay? And he just tweeted this, something similar, like literally just a few days ago, which shows how concerned this man really is. He says, if the Fed raises rates again next week, the recession will be greatly amplified. Mr. Elon Musk, they're going to raise rates again next week. There's not even a debate about that. The only debate is it 75 basis points or 50 basis points? That's it, okay? They're raising rates again next week. And Elon Musk feels the need to continue to just, say this, basically the same thing, just with a few different word choice, words changed out essentially, which shows how concerned this man really is about the state of the economy in 2023 and kind of moving forward essentially. And, as somebody that's followed Elon Musk for over a decade now, and as somebody that's owned Tesla stock for many, many, many years, right, going back to 2018 or so, I've seen kind of, Elon Musk's different perspectives over time. And I've seen when he's concerned and scared, and I've seen times when he's not scared or concerned at all. And some people were like, oh, man, maybe he's just playing with the shorts. No. Elon Musk is very concerned, okay? I can 100% guarantee that. And he actually wants to even put his brand a little bit behind this whole situation. So I think then when the likely Great Recession does come here, he's going to be able to say, I told you, Fed, you guys kept raising the rates and you kept raising the rates. And, I would say this. Yeah, they're gonna put us into a pretty bad situation, the Fed is. But it shouldn't come as a surprise because they screwed up the whole situation on the other side. They're going to go way too far this way. They went way too far the other way. They're going to have messed it up both sides. And then what they're going to end up having to do is save the market then and come to the rescue. And it's the same old story of we pumped too much. Oh, now we took too much away. Oh, we pumped too much. And it's like, oh, now we got to come in and save the day. And it'll be the same exact situation. So they're going to go too far this other side. There's no doubt about it. They're going to keep rates too high for too long, and by the time they get the signals that, oh my gosh, things are really starting to get ugly, because look, they're still going to continue to raise rates. Meanwhile, you've got companies like Toll Brothers out there reporting that the new contracts dropped 60%. We haven't seen these sorts of numbers since the housing bubble bust. Okay, so I listened to 3 conference calls last night. I listened to Costco conference call, I listened to the RH conference call, I listened to Toll Brothers call. Okay, and all 3 sounded concerned, but I can tell you the ones that sounded the most concerned were definitely RH and Toll Brothers by far. Okay, the good thing for Costco is they sell just so many needs-based items that it doesn't matter what happens, like people still got to continue to buy food and pump gas and things like that. So Costco's all right, at least in that scenario, right? But the Fed's going to way overdo it, no doubt about it. Elon Musk is very concerned. This is real concern out of Elon Musk. Trust me on that. Anybody thinks he's just playing games? No, not in this. Not when he keeps reiterating again and again and again in this whole scenario. Okay. Now, this brings me to Tesla numbers and something very important around Tesla numbers in 2023, because, I've been in the Tesla Squad chat, and by the way, if you're looking to join us in the Tesla Squad chat, you can check out the pinned comment down there and join us in there in terms of the Discord chat there. I think it's important that everybody that either is thinking about buying Tesla stock in 2023 or owns a stock is very realistic about the scenario we have going on, because going into 2022, we had this crazy backlog of vehicles, right? Going into 2023, that backlog's no longer there. And so in 2023, we're going to get the reality of how Tesla's business is really, truly doing. Because 2022 has kind of been pumped by this ridiculous quantity of orders that came in 2021 that weren't filled until 2022, essentially. And the orders that still came in kind of when things weren't so bad at the beginning of this year, right? With the first few months, January, kind of February, and maybe a little bit into March, right? And so I think we're going to get the reality. And, with Tesla, analysts are at 40% revenue growth, and I don't see how they get there this year. And that's why I'm really trying to debate that with a lot of, obviously, Tesla bulls and really talk about these numbers and the concerns. And I just don't think a lot of folks have factored in a very weak consumer and economy and what that's going to mean in 2023. Never mind if unemployment goes up and the economy really falls off the rails, and that a 40% growth rate is not even close to being realistic for Tesla in 2023. And I think just people are in this kind of, in my opinion, a little bit of delusional thinking around Tesla because they've seen 2022's numbers and look at inflation's high and look at the numbers. And it's man, you got to remember, we came into this year with such a ridiculous backlog. That backlog is not there in 2023. So now we're counting on new orders. And not only that, if you're talking about 40% revenue growth, we need massive acceleration of new orders to reach those sorts of numbers in this sort of environment. And with Elon Musk being concerned like he is, I don't think that happens, just to be quite frank. And I think we have to talk about this and what is realistic for Tesla. Because I think, if we're thinking these 40-50% numbers, I think it's just, I'll be honest, I think it's a pipe dream. I don't think we're getting anywhere close to that. And I think we all have got to bring down our expectations in a major, major way and understand that this is not going to be the end of the world for Tesla. And if they grow, like I said, to folks, if they grow 20%, it's a win. It's a win for Tesla if they grow revenue 20%. In this environment that we're going to be owning in 2023, if they grow 20%, that's a win, man. I think if they grow at all. And I don't even think folks are factoring in what if they didn't grow in 2023, right? And so I just think we got to consider all these different various factors. And if there's one thing we've learned about 2022, you know what? This is very important. I say this, okay? I think this is extremely important. I say this right now, okay? If there's one lesson we've learned from 2022, it's that if you are only thinking about the bullish scenario, you're losing. You're taking L's. You have to, as a even bull, you have to consider these bear cases. You have to consider what can go wrong here, okay? And I think when it comes to Tesla specifically, a lot of folks don't even want to consider the downside scenarios where it doesn't work out and kind of run these bear scenarios. And we have to do that. We have to do that. That's, I think, the biggest takeaway from this year is consider what can go wrong. Because almost everybody's been caught up into only the things that go right, and here's why it's going to go to the moon, and blah, blah, blah. And I think we've all gotten a slap in the face this year and learned, oh my gosh, we've got to consider these downside scenarios where it doesn't work out. Because until you consider those, it's hard to really buy the dip, right, in a lot of these stocks until you've considered, okay, here's what can go wrong. And then you can factor in your let's call it base case and your bullish case and scenarios like that, okay? So I just think that's very, very important for everybody that owns a stock or is thinking about buying that stock, okay? Now, in terms of PPI, came in hotter than expected, man. Bad news. Wholesale prices rose 0.3% in November, more than expected, despite hopes that inflation is cooling. The producer price index came in, obviously, 0.3% up month on month there. A 38% surge in wholesale vegetable prices helped push the food index up by 3.3%. Holy smokes, that ain't no dang joke. I think I want to get in the wholesale vegetable business. Sounds like a good business to get into. My gosh, that's absolutely insane. So nonetheless, this is horrible news. This isn't what I want to see. This isn't what anybody that's bullish should want to see. Because at the end of the day, the hotter these numbers come in, the more likely it means the Fed's going to continue to raise rates and keep rates higher for longer. Bottom line when it comes to that, okay? And so the good news is, in terms of PPI, it is coming down, and it continues to come down. Good news, okay? The bad news is, and this goes to the whole Fed, talking about they're going to, keep rates high for as long as it takes, right? Until the job's done, as they say. And the problem is we still got a ways to go to get to where we need to get to. And when it comes to PPI, which is really under 4%, okay? And so, we're still likely many, many months away. I don't know if it's more like 6 months away or 12 months away, but nonetheless, we're months away from getting PPI to under 4%, which is where we need it. and where the Fed needs to see it, okay? And so that's kind of the scary part here is, as I think things are going to get worse and worse, the Fed's still going to be stuck in a situation where they're going to keep rates relatively high. And it's just a bottom line. I mean, you just look at kind of how things are coming down. It's like, okay, everything's good, but we still got a ways to go, man. And that's kind of the pain that's out there, right? In terms of oil, this is some good news, continues to go down. Now down 5.5% so far this year, right? After this insane kind of blow off the top scenario that happened obviously in early summertime. And this baby's just been going down and down and down. So definitely very, very good news in regards to that, okay? In regards to markets in general today, obviously all the indexes down and shouldn't come as a surprise. PPI comes in hotter than expected. Yeah, we're going to go down. Now, something very important I want to show you right here, okay, is look at how much the market tanked right at the end of the day. This is a trading day today, right? And at one point, it was actually looking like it was going to be a green day, right? A good day. And but look at how things, just kind of decelerated and then just kind of fell off a cliff, right before not earnings. So in earnings mode still, right before the market closed, right? And you see that on a Friday, and it's very telling. It basically shows you that investors are scared, funds are still scared. They don't want to hold over the weekend, and so they dump right before the close on a Friday, essentially, right? And that just shows you how bearish the market still really is in reality, because in a bullish market, you don't get that. If anything, you get a buy cycle kind of right into the close on a Friday, because people are just feeling that confident that they're like, I want to hold over the weekend, because if there's a good chance we'll open, very green on Monday. In a very bearish market, people don't think like that. They think it's, we could open very down on Monday, right? Some bad news could come out over the weekend. Next thing you know, the indexes are down 2, 3, 4% on Monday morning. And if I'm holding positions into that, I might be down 8% on some of those stocks, 9%, 10%, 11%, right? And so that's the way people think in this sort of market. It's just very telling of kind of the state of the market right now, right? And there's definitely some downward moves here that I want to talk about. AMD under $70 once again, 68. I've talked about AMD. I think it's a great stock to be a long-term buyer of in 2023, and I'm going to likely be a big buyer of AMD in 2023 because it's going to be an off year for the AMD. It's not going to be a good year in terms of their numbers, or probably in terms of their stock price, right? But I think it's a great year to kind of load up on shares of that one. But, this is a stock that can fall to $40 to $50, and I think it's very important, once again, that everybody understands that, because I think a lot of folks see it and they're like, it can't go down anymore, right? This stock was just $55 like a month ago. So if you think it can't go to 40 to 50 range, it definitely can. It definitely can. If there continues to be more weakness in the semiconductor space, there's no doubt that one could fall to the $40 to $50 range, okay? Amazon is under $90 now at this point in time. Google McDougal just continues to fall, it seems like almost every single day. And there's no urgency. That's the biggest thing I'm kind of finding out there. There's no urgency. And even with myself, I'm not in an urgent mood to buy some of those stocks. I'm going to start getting out there more often in January and February in terms of my buys. But there's no urgency, because what's the point of being urgent when the economy is just going to get likely far worse, and all these company earnings are likely to get far worse in 2023, right? Which then puts you into a weaker 2024 as well. And so I think that's what is happening with many of these stocks, especially these large, super large companies, is people are looking at it like, why do I have to buy that stock here today? Like, what's the reason, right? Is all of a sudden the economy magically going to get better? Is the Fed magically going to stop working against the market? And the answer is no. It's just no. It's a flat out no, right? You get some of these stocks like Tesla had obviously an oversold bounce here today, which shouldn't come as a surprise to some folks. Like, sometimes stocks just get oversold and they're going to bounce. But then those bounces are very short-lived in this sort of market, right? It's like, you get maybe a day bounce, maybe a week bounce, and then next thing you know, it's setting new lows again. That's the market we're in at this point in time. CRM, had a kind of a dead cat bounce here today, 1%. But, we know where kind of the trend's going with that one, right? RH, I listened to a conference call in Gary Friedman, who I respect in a huge way. I don't think a stock like this is done going down, just to be quite frank. Based upon kind of his commentary and how worried that man is about the state of the housing market and where we're headed here. And he was very clear that, he believes it's going to get worse before it gets better, which he's preaching to the choir when it comes to that, right? I don't think this stock's done going down at all. I think it's going a lot lower. And RH is a stock I'll be interested in. RH is a stock I'll probably be buying at some point, but it's not now. It's not the appropriate time to buy that stock now, because the housing market's not even close to being going down. I mean, the housing market has another year of weakness ahead, And that's the best case scenario. The worst case scenario is really like there's going to be like 2 or 3 years straight of weakness in regards to the housing market. And so a stock like RH is like, I'm not buying that one yet. It's not the time. It's not the time. There will be a time and place to buy a great company like an RH, but it's not today. And, something very important happened on that conference call. Something super important that I got to tell you guys about, okay? They asked Gary Friedman, why'd you guys stop buying the stock back? Because they got this big buyback. They got a ton of cash on the balance sheet. Why'd you guys stop buying the stock back? And what Gary said is, we don't know how bad this is going to get. So I know our stock's down huge, but it's not, basically what he was saying is it's not worth it to even buy the stock back right now because we don't know how bad this is going to get. We can't see the shore. He gave this analogy of like, they're in a boat and they can't see the shore. And so they don't want to spend all the gas or something like that in terms of the boat, right? And so it's very telling that man sees the stock down, basically cut in half this year. And he's like, we're not buying it back. Maybe, and I think that's important. It's just another reason of many reasons why I'm not buying that stock yet. Because if the CEO, the man that's led this company for 20 plus years, says, I'm not buying this stock with our money, heck no. I think that's very telling in kind of where he likely sees things going, okay? Very, very, very telling, okay? So that's that. The next thing I want to talk about that's very important is kind of this group of stocks that have been doing actually decent, but likely you're going to have some big falls coming in 2023. And it goes back to the banks, okay? You look at a stock like JP Morgan, it hasn't been hurt that bad this year. It's down 18%, which, I would take a lot of my stocks being down 18% this year. I'd be like, I'll take that, okay? And when it comes to this, right? You got to understand, when it comes to banks, if you're talking about major weakness coming in the economy in 2023, if you're talking about loans, debt not being paid back, or just the debt cycle in general slowing massively, it's going to hit the banks. And it will hit them actually pretty darn hard, essentially. And this happens in recessions, right? And it happens rather quickly. And if you look at a stock like JP Morgan, in the great financial crisis, that stock fell from $52 to $22. And it happened, rather quickly, right? But meanwhile, JP Morgan stock gave this illusion several times that everything is fine. Everything's fine. Everything's fine. Even all the way up until September 2008. It gave the illusion everything's fine. And then it wasn't, right? Now, keep in mind, I do not expect the banks to have as big of sell-offs if we're having a pretty big recession this time as they did last time, because there's a lot more systemic risk for the banks in the banking sector in general. However, do keep in mind these ones could fall dramatically. You look at a stock like Wells Fargo. It went from $37 to $12 in 5 months in the great financial crisis. That's incredible. Bank of America went from $50 to $3. $50 to $3. That's just quite an insane move. Look at Citigroup. Citigroup went from $550 to $14. From $550 to $14. You got to be flipping my flapjacks. Now, once again, I do not expect any of the banks to have those sorts of insanity falls, right? Where some of those stocks were not even 90% plus moves, right? But believe me, if we're talking about the economy seriously weakens and, some folks don't pay back debt, trust me, the banks will get hit and they'll get hit very hard. We already know mortgage activity is going down massively. That's hurting the banks, right? We obviously know the IPO market's dead and will continue to be dead for at least the next year. Because at the end of the day, people don't even want to buy AMD stock. People don't even want to buy Tesla stock. People don't even want to buy Google stock. People don't even want to buy the best companies in the world. You think they want to buy some new company going public right now? Absolutely not. There's no risk taking for any of that. The growth stocks in general, people don't want any pieces of those. That's why those stocks have fallen 60, 70, 80% this year, right? And so they're not going to be making any money from IPOs. So the banking sector itself is likely set up for a very bad 2023 is the way I'm kind of seeing it. And so don't be surprised if you see many of those stocks fall considerably, but they give these kind of false illusions of like everything's okay, why things are going on essentially, right? Goldman Sachs went from 247 to 77. So just something to keep in mind there, okay? One of my stocks just did a buyout that I want to speak about here, which is called Avant Brands. So they bought out this company called Flower, and they paid about $4 million, and then they're going to do $1.1 million of shares of Avant, essentially. And it gives Avant now 185,000 square feet of facility here, and it expected to increase their production capabilities of about 60%, and resulting in Avant being one of the largest indoor ultra premium producers in Canada, which is pretty exciting. And obviously in this environment, you don't want to see your company spending too much money, but Norton's done a very good job kind of running this company over the many years, so I'm trusting him kind of on this move. And somebody asked him on Twitter, and they asked him about like cash burn and those sorts of things, and somebody posted this inside the Discord chat, and so I went ahead and screenshotted it here. It says, nope, our Q3 was cash flow positive from operations. Going forward, Avant operations, excluding flower, shouldn't be burning any cash. Just need to ensure we continue flower sales while we transition into our genetics. Flower will burn some money in the short term, but nothing concerning. And, that's great. I mean, that's what you want to see from a company in this sort of environment right now, because we know, as many of these small cap companies have burned through money like it's nobody's business. And it's countless of them. And now tons of them are in such bad financial positions that they might go bankrupt, right? And it's just kind of a horrible place to be at, just to be quite frank. And I mean, it's so many stocks. So many stocks are literally, could be within the next 6 to 12 months of bankruptcy that are out there right now. It's ridiculous. It's absolutely insanity in terms of that, right? And, I was looking at kind of Avant's performance this year, which is down 44%. I think the stock will probably finish the year. I wouldn't be surprised if it kind of rallies into year end, especially after this acquisition, and it was up 7% here today. I wouldn't be surprised if it rallies into year end and it's maybe down, finishes the year down 35%. On a year like this should have been a, when you see all these other stocks down 50, 60, 70, 80%, it goes to show you really how well Norton's done running that company. And I got to give him a lot of respect, because we've been let down by a lot of CEOs that have incinerated their cash, right? And just absolutely lit it on fire and put their companies in horrible positions. And it's a lot of them, man. But I got to say, with the job Norton's done, he should have been, and that company should have been the most speculative one certainly of stocks I own, and it ended up being one of the less speculative of the small cap bunch, right? And like I said, I think that stock will maybe finish 35 or 40% down for the year, which is not good. But in this environment, with all these other stocks down 60, 70, 80%, I'll take that, right? And it really goes back to him leading that company as a management team. And it goes to show you how important, like a CEO who has his mind on straight and understands how important capital is, right? And understands why, getting to cash flow positive is so important. It shows you in a massive way in the performance, right? And so, anyways, I'm actually a very happy shareholder of that company, which isn't the same to be said for all my companies. Some of my companies have let me down massively this year. Not Avant, man. They've come through, and honestly, I'm surprised that stock's even down this year. But it shouldn't come as a surprise when it's such a small market cap like that. So, hope you guys enjoyed today's video. As always, if you're looking to join us in my private Discord chat, access all my exclusive videos, the breadcrumbs tab, my portfolios, all those sort of things like that. Check out the pinned comment down there, and you can join us in there. Much love, and have a great day.